Gentlemen, welcome back to the channel. There is reason to believe we're going to have a good week this week. First and foremost, there is some broader market headlines and news, specifically in regards to trade with China that is, well, already having a positive impact in the crypto markets. Bitcoin, you can see over this weekend, hit a low of about $103,000 per coin. At the time of recording this video, it's back up to about $108,000 per coin, about a $5,000 move from the lows. That's a good sign. And really, from some of these headlines that we're going to talk about in this video, the last couple of hours, Bitcoin has taken a move higher. Now, in today's video, we're also going to be going over the earnings for this week, the economic data that we will be getting. Now, we will actually be getting the CPI report this week. We're expecting, at least. That could have big implications for what happens in markets. But I really want to highlight a main point. I think we all instinctively know this, but you want to be buying when people are scared. You know, be greedy when others are fearful and be fearful when others are greedy, right? But most people don't follow that. Like, in principle, sounds good, and historically you've made a lot of money if you've done that. But if you really follow that, right now you would be buying the markets. Right now you would be actively planting seeds and getting ready for a recovery, because markets are bearish right now. Sentiment is bearish right now. Not necessarily if you look at the headline S&P. And here's where things get a little bit weird. If you look at the headline S&P, you're only down, you only fell about 3% from the high to the low recently. But that's because mega caps are so reliable, they're so strong, their balance sheets are so good, their earnings and margins are so good and or predictable that they are like 30% of the S&P alone, the top companies. People don't want to sell those stocks until shit gets really bad. But the momentum areas, the quantum, the AI, the software, the biopharmas in a lot of cases are down a lot in just the past 2-3 weeks. And those areas are likely going to be the ones that recover the most once we come out of this. And this week could be good for those areas. So if you're someone that is into AI stocks or into quantum or maybe a biopharma guy, this week could be a really good week for you. Now, if you guys want to take it a step further and come trade with us in the trading community, where we are going out and finding these under-the-radar AI stocks, AI software companies, energy, quantum, gene editing, biopharma names, robotics, okay? These are main themes for the next 10 years. We're going out and planting the seeds in high-quality companies that are overlooked by Wall Street. The fact of the matter is, you know, Wall Street, they cover the same stocks aggressively. Like, you're not going to find something about Nvidia that everyone else doesn't already know. But in a $1 billion, $2 billion, $5 company that has substantially less coverage and eyeballs on the stock, you might find and discover some material information that Wall Street is not priced in yet. And that's what we are targeting in the main themes, right? Now, this is not necessarily going to work for food companies, right? Nobody's going to care about, you know, the food that has the higher margins, right? If that was hot in markets, that's where we would be looking. But it's about AI, quantum, robotics, biopharmas, robotics, right? AI software. These are the areas that are going to do very well in the next 10 years, that already have a tailwind going to help drive returns, especially as we get rate cuts and all of that. This portfolio is up 144.5% year to date. On October 8th, at the peak of the portfolio, before a lot of the carnage started in markets, this portfolio is up about 220%. So it's a very high risk, high reward kind of strategy that we are pursuing. So if you're a very conservative investor, you index fund things, like, this is not for you. But if you're someone that is looking to grow your money potentially exponentially, this is something that could serve you well. Now, it's not a recommendation. It's not financial advice. Come to your own conclusions, okay? But we have been performing. So that link is down below if you guys would like to check it out. This is also public, the brokerage, okay? There's a link down below. If you sign up and deposit $1,000 or more, you will get $100 in stock of your choice. $100 in some of these beaten down companies can go a long way. And again, I have over 6 figures invested in this brokerage account. I love public. It's got to be the best brokerage out there today. So check those links out down below if you guys would like to. But let's get into your broader market news today. Now let's get into your broader market news today. The Wall Street Journal reports that the U.S. is beginning quiet retreat from Trump-era tariffs. It says the U.S. is gradually stepping back from several of former President Trump's signature tariffs, signaling a shift in trade policy, according to the Wall Street Journal. Donald Trump says that Putin is going to take something in Ukraine. U.S. President Donald Trump said he believes Vladimir Putin is going to take something in Ukraine. He argued that the U.S. can't give, quote, all its weapons to Kyiv, citing national security. Trump reportedly refused to send Tomahawk missile systems during his meeting with Vladimir Zelensky at the White House on Friday. Donald Trump says he is not looking to destroy China. U.S. President Donald Trump told Fox News he is, quote, not looking to destroy China, noting he collected hundreds of billions in tariffs during his first term. Trump said new tariffs now equal 155 to 150% and called Xi Jinping a smart leader open to a deal. He plans to meet the Chinese president in 2 weeks. So, again, it seems like things are moving in the right direction, and these are probably some of the headlines that caused crypto markets to recover a little bit again in the last couple of hours. Donald Trump says, quote unquote, I'm not a king. U.S. President Donald Trump responded to nationwide No Kings protests, saying, I'm not a king. He denied any link between the demonstrations and the ongoing government shutdown. Earlier, Trump shared an AI-generated video on Truth Social showing him flying a plane labeled King Trump. He's trolling. We all know this. Donald Trump on the National Guard says, we'll go to San Francisco next. Trump says, don't forget I can use the Insurrection Act. Donald Trump has also said that he will end subsidies to Colombia. Now, the U.S. is rolling back tariffs on products that cannot be grown, mined, or naturally produced in the United States, per the Wall Street Journal. So again, a little bit of a rollback to some of the Trump tariffs that, some of the scary headlines we've seen in recent days. Now, Israel has launched airstrikes on southern Gaza. Israel carried out 3 airstrikes on Rafah after Hamas allegedly violated the ceasefire, Channel 12 reported Sunday. The strikes followed an attack on an IDF engineering unit. Prime Minister Benjamin Netanyahu and Defense Minister Israel Katz held talks to assess the situation. The U.S. earlier accused Hamas of planning attacks on civilians, which Hamas denied. The IDF has not commented. South Korea's presidential advisor says, quote, the U.S. and South Korea made concrete progress in most issues during their trade talks. Also in the news, Trump is now focused on a regime change in Venezuela to topple Maduro, per the Financial Times. Now, again, as I said in some of the prior videos as well, the markets are just bearish right now. People are bearish. Sentiment is bearish. Even like positioning is starting to get bearish. The CNN Fear and Greed Index is coming in at 27 in the low side of fear. Market momentum is fear. Stock price strength is neutral. Stock price breadth, extreme fear. Put and call options fear. Market volatility is fear. Safe haven demand in extreme fear. And junk bond demand in extreme fear. The AI Investor Sentiment Survey shadows similar conclusions. Bullish investors at 33.7%, neutral investors at 20.3%, and bearish investors at 46.1%. People are just bearish. Wall Street is just bearish right now. And historically, when Wall Street is bearish, you want to be a buyer, okay? It pays to be a buyer when Wall Street is bearish. The percent of stocks trading above their 50-day moving average hit a high of 74% in early June. It's down to 42.1% today. So that just means like 60% of this market has been in an active downtrend for the last couple of weeks at least. So, yeah, could it get worse from here? It could, right? But you're already so washed out from a sentiment perspective. People are already so bearish. The markets are grappling with a lot right now. Bad regional bank loans, China-U.S. trade tensions, and a government shutdown. Like, it could get worse from here, but it seems like things could be about to get better as well. Okay, we were a little overdue for maybe a corrective phase, maybe some consolidation, and now we have gotten just that. Okay, now that that is out of the way, let's quickly run through earnings. Okay, so earnings this week, you're going to get regional banks Monday, really, okay? HBT Financial, um, Zion's Bank Corp, that was one of the big banks that, really hurt things. Cadence Bank, Service First Bank, okay, and likely some other smaller ones. And, we're going to see how bad is the loans, right? Zion's was one of the banks that reported they had like 50 billion or something like that in bad loans. Something like that. I don't know the exact numbers off the top of my head, but Zion's was one of the banks that really got hit in this last week, and that's what also caused a lot of the pain and carnage for the areas that we are targeting: AI, robotics, quantum, some of the longer duration growth areas. Because if you have another regional bank crisis that drags us into a recession, you don't want to own those high flying stocks. You want to own the Apples, the Googles, the Amazons, right? That's the perspective, at least on Wall Street, okay? So those are the stocks that get sold off first, okay? So that's basically Monday. Cleveland Cliffs, they're going to tell us a little bit more about the economy as well. That's going to be important considering we're not getting a lot of economic data. Now, Tuesday pre-market, Coca-Cola reports, pretty stable company. GE, Elevance Health, Lockheed Martin, Philip Morris International, RTX, 3M, Pulte Group, GM, and Northrop Grumman. And then Tuesday and after hours, Netflix, Intuitive Surgical, Texas Instruments, Capital One, Mattel, East West Bank, Omnicom, and some others. Obviously, Netflix is going to be a big one to move markets. There was actually in the last 3 months or so, I don't remember exactly why it was, but people started to cancel Netflix. Maybe if you guys can let me know down below in the comment section. So that one could actually, it's a little bit of a wild card from my perspective. Like, how much did that catch on? Did they actually lose, subscribers? I don't believe Netflix will actually be updating subscribers anymore. They're trying to focus on other metrics. Okay, so keep that in mind. But Capital One will be a big one to watch as well. Again, people spending, since the government is shut down, is in focus. Now, Wednesday, Amphenol, GE Veranova, Vertiv, Boston Scientific, Hilton, AT&T, Tech, Thermo Fisher, and Winnebago. Wednesday and after hours, Tesla, obviously a big one, IBM, Kinder Morgan, QuantumScape, Century Communities, Texas Capital Bank, SAP, Alcoa, Lam Research, and some others. So still even more banks, some AI names, some data center-like names like Vertiv, IBM, and then obviously Tesla, very important one there. Thursday, American Airlines, Honeywell, Dow, Hasbro, Nokia, Southwest, AutoNation, T-Mobile, and pre-market. Thursday and after hours, you have Intel, Newmont, Alaska Airlines, Deckers, Boyd, Ford, and some others. And then Friday pre-market, P&G, some healthcare names, and maybe some banks thrown in there. So big earnings off the top this week: Intel, Tesla, IBM, Netflix. Okay, those are your biggest earnings. But Capital One's going to be very important for the for a read on the economy. Hilton, surprisingly, could be important for an early read on the economy. Vertiv for the data center space. So there's actually quite a few industries specifically that will be telling us a little bit more about maybe how the economy is doing, how those separate industries are doing. And that's going to be a big theme of, this upcoming week as we are now getting into earnings. Now, expectations are high for earnings, but banks really delivered last week, and I don't think there's any real reason to expect earnings are not going to come in good again. Now, for your economic data, starting off on Monday, CB leading index month over month will be coming out. A 3-month and 6-month bond auction, net long-term TIC flows, foreign bond investment. Okay, so we should be getting some of these numbers, overall net capital flows on Monday, but no real big catalyst. On Tuesday, you have Fed Waller that will speak at 9 o'clock in the morning, and then again at 3:30 p.m. Some oil stock numbers, but nothing too important. On Wednesday, you have, again, nothing too important. Some mortgage data. We should be getting some more energy data. We do have a 20-year bond auction at 1 p.m., and the rate on this should come down a lot. The last yield you had was 4.613%. So, yeah, 10-year treasury yields are below 4% at the time of recording this video. So that should be coming down quite a bit. Now, on Thursday, existing home sales for September should be coming out. Kansas Fed Composite Index, Manufacturing Index as well. Some shorter-term bond auctions. We should have got initial jobless claims, but we have not got that so far. And now that the government is shutting down, look how many initial jobless claims reports are starting to stack up. You're looking at, what, 1, 2, 3, 4, at least 4 of them now that are stacked up that we have not got. So when the government does reopen, we're going to have a bunch of data. Now, on Friday, we are actually going to get the CPI report. The BLS says we will get that because the cost of living adjustment from Social Security. So I guess that's the excuse why we're going to get this. I'm sure since the government is putting out these numbers, they're going to look pretty good, right? Okay. Just my expectation, if these numbers were going to look bad, Trump would probably say, yeah, don't put out these numbers, okay? Wouldn't have to. Government shutdown. Now, core month over month is expected at 0.3%, unchanged from last month. Core year over year expected at 3.1%, unchanged from last month. Headline month over month expected at 0.4%, unchanged from last month. And inflation rate year over year on the headline expected at 3.1%. That's actually up from last month's 2.9%. So you're expecting a pretty status quo CPI report. You're not expecting much of a change. And considering that, again, what I just said, you probably have room to come in lower on CPI. Now, S&P Global Composite PMIs will be coming out. Manufacturing PMIs and services PMIs will be coming out. Again, since we don't have a lot of economic data in recent weeks, that's something Wall Street's going to pay a lot of attention to. Now, we will get the Michigan Consumer Sentiment final numbers for October, 5-year inflation expectations, consumer expectations, and current conditions, as well as 1-year ahead inflation expectations that will be coming out on Friday. So, again, if you had to pinpoint a day, Friday's the big day as far as economic data, but really, again, throughout the week, as far as earnings are concerned, besides Monday and after hours, that could be a little important, but Monday, tomorrow morning, not going to be that important, but basically every other day, Monday and after hours, Tuesday, Wednesday, and Thursday are going to be important from a broader market perspective because of these earnings. Now, again, as I already showed as well, if you truly like to buy stocks when people are fearful, like people are fearful right now, people are bearish right now, could markets fall further? Sure. If tariffs go into effect on China or the government shutdown leads to, larger fears of a recession or something like that, you could see more downside in markets. But people are pretty fearful. They're washed out. Sentiment's pretty washed out. And certain areas, again, like AI, are pretty washed out as well at this point. And I think the risk reward does favor the upside at this point because the long-term thesis for 2026, like inflation coming down, multiple Fed cuts, broadly clarity on trade deals, none of that has changed. The economy getting better, consumer getting better, no tax on tips, no tax on overtime, tax changes in the big beautiful bill, okay? Real estate starting to move again and people able to sell their homes. Like, none of that has changed. Same thesis. Earnings are strong. I think they're going to come in good this quarter. Even though we have higher expectations, than previous quarters. So when you put all of it together, you're looking at a pretty, bullish backdrop for markets. And I don't think it's changed. So, yeah, you can also see on the S&P, the RSI did hit the lowest level you've seen since we were in that crash back in, April, right? The 20% crash. The RSI hit 42 on the S&P, which it's back up to 53. You're basically at a neutral level on the RSI, but hitting that low at 42, that's when other periods of selling in markets have, ended, right? You get a shot lower in the VIX, and then stocks recover from there. So, yeah. That is it, ladies and gentlemen. Let me know your thoughts on this down below in the comment section. If you guys want to come trade with us live in real time, check out that link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.